This is our Forex blog for December 5th, 2011. And like most days, we really want to buy the super strongest currencies versus the weakest, and we want to sell the weakest versus the strong. Today, we compare each one, the dollar and yen are the two main pairs, to all the other pairs, and we use 5 different statistical trend tools to do that. 3 of them measure the direction. Is the dollar going up or down? What percentage of them are going up or down? And 2 of them measure the intensity. One's on a bar-by-bar basis, how strong or weak it is compared to the last 20 days average for that time of the day. And the other one is more of an intermediate time, 30-minute to hourly trend intensity. So those get averaged together. About half of this reading is the intensity of the moves, and the other half is the direction. If the majority of dollar pairs are going up and they're doing so with incredible intensity, you're going to have an 80 to 100 reading. And usually anytime you see 2 bars in a row with incredible strength, that strength's likely to continue. And underneath that, we have the daily trend, weekly trend, and monthly trend. Sometimes, like you can see here with the dollar, you have mixed trends. The daily trend's up, and the weekly trend's down, and the monthly trend's up. I primarily focus on the daily and weekly. If the daily and weekly are down and I see incredible weakness, I want to sell it. It's like for the yen, it's a no-brainer, sell it. The Australian, it's strong on all time frames today. The New Zealand after 3:30 is very strong on all time frames. And so the New Zealand yen is likely to go up. The Australian yen is likely to go up. The Swiss, extremely weak longer term, and so we have some strength here, and then the weakness came in. Less strength than weakness. That is likely to return to a state of weakness because of how intense the longer term trend is down. So the Swiss, we're looking to sell that versus the strongest pairs. So today, if you were trading, you should have focused on the highest odds trades. Most of us trade all the bottom pairs versus the dollar or the yen. The yen has a much weaker weekly trend than the dollar, and the monthly trend is just barely up in this, whereas the dollar's monthly trend is quite a bit stronger. Monthly trends take quite a bit longer to change direction than the weekly trends, which take longer to change direction than daily trends, which take a lot longer to change direction than real-time trend, which can change trend within 5 minutes. So let's look at the Australian yen and New Zealand yen. These are currencies you should be looking to buy, preferably when they're above the hourly moving average. Our containment bands show you the hourly moving average. Once it's above there, it tends to trend up. Now, today, the Australian wasn't quite as strong as the New Zealand. So if you compare the two, you can see the New Zealand was, made quite a bit of a bigger move up. Sometimes the Fibonacci areas, which I, have colored the same color gray as the hourly here, get in the way of it. But usually you can see where the hourly is approximately. So this broke out right here is pretty high probability trade. Not the most explosive trends. A lot of times we see 30 to 50 pip moves. This is pretty much 15 pip move, went up to the 1.618 fib target, and you can see the real-time tools on here. Extreme strength. Usually I wait for a 15 or 25 pip pullback before buying. This one really didn't give you more than about barely a 15 pip. So this is right on the border of that. You can see the weakness on the way down wasn't quite as much as the strength before, and as it starts going back up, there's really very little intense strength. So you probably would exit this with a small 3 to 5 pip win or break even. Nothing really happened. Anytime a currency can't get above the previous swing high, that's a pretty big sign that the trend is going to reverse. Here it had a false breakout, tried it again and failed. The trend's over. Looking back at the currency meter, 4 o'clock here, the Swiss had a lot of weakness. Then about an hour of, with the exception of 2 5-minute bars, mild strength. That weakness is likely to resume because the daily, weekly, and monthly trend is down. So basically you would want to look for Australian Swiss and New Zealand Swiss buys. This is not a pair that I typically trade, so let's just bring this chart up. You can see, especially after 4 right here, the Swiss was weak, so you're looking to buy pullbacks on this. This is a nice trade right here. It only goes up about 10 pips. Pulls back again. You have a nice little sideways range right here. And, today's not one of those trend days, but most of the time the fib targets are good places to get out. This second trade right here went up 10, 20, 30 pips. and the market pulled back again, and it didn't go underneath this swing low, which is always a good sign, and went up another 20 pips. Let's look at the New Zealand Swiss. After that explosive move up, you buy this pullback right here, and it does try to continue. Notice again, it's not able to take out the previous swing high. That is always a good reversal sign. And in my experience, using fibs, you can also use those to determine trend. If this is really going to continue on up, it's going to go up and go past the 50% and also the 62%. But once it comes back down underneath that 62% right here, the uptrend is pretty much over for the time being. It usually is going to pull back to where the swing low is right here. And if it doesn't find support there, the trend is now in a downtrend. The dollar was also extremely weak today. It had a little bit less weakness than the yen on the weekly trend, but Australian dollar buys, New Zealand dollar buys, also good ones. You can see that this one went from below to above the hourly here and then broke out, went up about 20 or 30 pips. You got a nice little pullback right here, went up 20 pips, a little bit less of a pullback here. And most of the time you're going to draw your fibs on there, and that's going to tell you where to get out of this trade at. Notice it went right almost to the pip, to the 1.618 fib target, and that was the end of the move. Pretty dead day today, trend-wise. So I'm going to do our regular class now. I'm going to save this. Most days are a lot better than this as far as finding, explosive trends.